How to blow up an account with a 70% success rate. Hi, it's Charlie giving you Saturday's video. I hope you're very well. So this week I've been literally inundated with an email question here from a follower of these videos. So I'm just going to read this question out to you. So Charlie, I've known you since a webinar you did a couple of months or so ago, and it says, I had just lost $2,000 by trading gold, and I was about to quit trading, but after seeing your video, which was titled, Should You Quit Trading? This person said, I said to myself, let's give it another try. Don't you mind creating a video about how to manage our risk? I personally cannot stop over leveraging. When I checked my strategy, I found I won almost 65 to 70% of my trades, but one single loss, losing trade, took all of my profits. What should I do? ? I believe many other traders can have the same issue. If you could explain about this, that would be awesome. This is from a trader in Iran. So if anyone wonders why the language sounds a bit funny, it's just the translation there. So this is what I would like to say to that person first and foremost is you're not alone. This is a very common thing that happens with traders. That in fact, one of the big UK brokers published some figures a few years ago, and they were very, very similar in that 65%, or it was around 65% of their clients, of their total clients, 65%. No, I'm getting it wrong. Their clients were right. Here we go. Their clients were right or won 65% of the time. So 65% of the time, this broker's clients were profitable, and yet 70% of their clients lost money. Well, how does that work? Okay, it all comes to risk and to reward. So the person who sent me this message, and I'll take a screenshot so you can see this message. Let's see if I can get my screenshot software out very quickly. So just so you can see the message comes in without me showing their name here. There you go. So this is the message I just read out. Okay. So I wasn't doing a seminar in Iran, by the way. I was just doing a webinar. But anyway, that's the message. So how does this person overcome this? Well, firstly, if someone's right 65 to 70% of the time, but then still blows up an account, what it suggests to me is that person, yes, over leverages, and probably almost definitely doesn't use stop losses. So the first thing that person has to do is they must start using stop losses on all trades. On all trades, you must use stop losses. There are incidences with experienced traders where they don't have to use stop losses because they hedge their trades. That's a completely different topic. If you are just taking directional trades, so you're trading with a given strategy, you must use stop losses. Now, I've got some tough love for this person, Reza. I'm sorry to say this, but your entire strategy is utter rubbish, and I can tell you this right now because I can tell just from the comments that you've said. And why? How do I know that your entire strategy is flawed? Because the only reason you're right 65 to 70% of the time is because you're either not using a stop loss or you're having really, really wide stop losses. That's the only reason you're right 65 to 70% of the time. But what's the point in being right all of these times, 65 to 70% of the time? So let's say out of 10 trades, there's 6. Okay, 6 winners. If your loser that comes along massively just wipes out all of your winners, it's a flawed strategy. That's the problem with it. So you need to throw it in the bin or make some major changes to it. But I would suggest that if you make those changes and you start putting more stop losses in, or stops which are closer, then what will happen is your win rate will come down. So maybe it will bring the win rate down to 50% and you still won't make money. So what's the solution? The solution is you either throw that in the bin or you have to make major changes to it. And accept, please, please, I implore you, you do not need to be right and win 65 to 70% of the time. I am only right 40% of the time on my trades, and yet I make money. I'm a profitable individual trader and money manager as well, professional money manager. Because when I win, I win more than my average loss. It's as simple as that. So I may be wrong. Like I said, I may be wrong, for argument's sake, 6 times out of 10, let's say, 1, 2, 3, 4, 5, 6. But when my winners come along, when those 4 winners come along, they are much bigger than those losers. That's it. It's simple, risk and reward. So the best thing that I can say to you is don't focus on being right and having a high win rate. You're going down the wrong path. You will lose. You will spend years trying to find the holy grail of trading that way. Be satisfied with something that might be right around 50% of the time or so. But if you must use a stop loss with that, and in order to make money with that, for every $1 of risk that you have, you must be looking to make greater than $1 on your winners. So if you're right 50% of the time, that means out of every 5 out of 10, and obviously it doesn't work that way in the short run, but let's just do that. So you've got, for every 10 trades, for argument's sake, you'll have 5 losers and 5 winners. Okay, it doesn't work that way, of course, in the short term, but it will even itself out over time. So let's say you had an overall 50% success rate. So what you need to be doing, so for every one of those that loses, let's say you lost $1 on each one of those, that means you would lose a total of $5. But if you're on your winners, you made $1.50, that would mean that you would be making $7.50. Is that right? I hope so. So therefore giving you a net profit of $2.50. So hopefully I've done my maths right there. So what you're now you're into a process of making money without having to have a high win rate. Having a high win rate the way you've been doing it, and then having just a few trades which blow up your account, it's destined to fail over and over and over again. So forget that. The main advice, use stop losses and look at your risk and reward ratio. Now, the other factor is that's risk and reward. When you're using stop losses, you must calculate how much you're going to risk of your account balance per trade. So we've just talked about using stop losses, and then for every dollar you risk, looking to make more than $1 on the winners. How much do you risk per trade? As a general rule of thumb, and this really is just a general rule of thumb, but it gives you a starting point, risk around about 1% of your account balance per trade. So if you've got $1,000 in a trading account, for example, then your maximum risk per trade is $10. Okay, that's it. So you must calculate, in order to calculate your position size, you need to know what your stop loss is going to be, how many points away is your stop loss. Then you can use a position size calculator, and that will tell you. You then input the account balance and how much as a percentage you would like to risk. Then it will tell you the position size. So then it will tell you the position size, and that position size will then give, you then put that on, which will ensure that the maximum that you lose, if you are risking 1%, will be $10. If you start trying to risk too much per trade, like 10% per trade, you will blow your account. Please keep your risk certainly lower than 2%, but if you're a new trader, it should be lower than 1% because newer traders are going to be making more mistakes. So keep it up to 1%. So 1% or less, 1% of account. Okay, how do you therefore calculate your position size? Okay, so there are position size calculators out there on the web. I've got one here from myfxbook.com/forex-calculators/position-size. So you can come down to here. Let's say you're trading a currency on here. I don't know if it covers off gold or whatever, but you can, yes it does, but you can Google position size calculators. So for argument's sake, I'm just going to put Aussie dollar in. Now your account currency, if it's in dollars, that's fine. Leave it in US dollars. An account size. So let's say your account size is 1,425. Okay, I've just completely made that up, of course. And you're risking 1% in your risk ratio. And for argument's sake, you've looked at the charts and and your stop loss needs to be 76 pips away, 76 points away. Hit calculate, and it will tell you, right, your position sizing needs to be 0.02 of a lot, and that will risk, as you can see here, this is on your results, that's telling you that you will be risking $14.25, which is what? 1% of your total. So a simple calculator like that, and there's plenty of calculators out there on the web, will help you to put the correct position size in relative to the stop loss you're wanting to have, which ensures that if you do get stopped out, which 50% of the time you will be, you only lose 1% of your account. I do hope that my advice today is useful to you. Please, like I said, I implore not just the person who has written in, but anyone who's newer to trading, please stop worrying about being right as much as you can. It's the path to the dark side of the force. You will lose going down that route. You will. It's not worth it. You will become a statistic. Think about having an average win rate somewhere around the 50% mark, let's say, and try and build your strategy and your approach around that. But looking for when you are right and when your winners are much bigger than your losers. So for every dollar that you risk, you might want to be looking to try and make $1.50, $2, $3 on your winners. So look at it that way. Always look for a positive risk to reward ratio, and that way you're putting yourself in a much better position to make money in the long run. Hopefully that's been of use to you. Any comments, by all means, add them in the box below. Have a lovely weekend.